Hey, what is going on, everyone?
Yo, what up, Ken?
Hey, how's it going, my guy?
Good, man. Good.
Right. Let's just wait, a couple more minutes so we have people that could actually attend to hop on, and we'll get this started. All right, all right.
Okay, cool, boy.
How's it going, everyone? Everyone's day going smooth?
What's up, kid?
Ain't not much, my guy.
Another beautiful Monday. In fact, it's a beautiful Monday with this overcast we have, right?
Oh, yeah. All right. All right, so today we're gonna talk about is how to really mark up using your Fibonacci retracement tools and using like trend lines for potential breakouts, which I'm actually gonna show you guys to give you more of a clear of a confirmation as well too. So let's get started. So we're gonna be looking at Euro USD on the 1 hour time frame. So just for future reference, if you are going to be in a loud environment, just mute yourselves, please. All right, awesome. So as you guys can see, this is, previous low, secondly as your support, and the previous high as your resistance level. So that's where we're seeing resistance coming into the downside, support area, seeing it coming up to the upside, right? So we're going to be using our Fibonacci retracement tool, and we're going to try to get it on top of the wick.
For Kathy. For Kathy.
And
Kathy Bob.
all right, awesome. So as you guys can see right here, you guys can see this, it became a whole bullish movement, right? So where we're looking for is the most important key area. That 6-month retracement, right? Perfect. So on the top, we're seeing that it formed a nice double top. But what I like to do anytime we market or you're able to see the market go up to a certain place, you always make sure that you highlight that. So I'm talking.
Voy a jugar como unos 10 minutos, güey. Arre, pues.
So what I'm going to do is that I pay attention to this price area. So once it forms up and it creates a new high, so nothing here in sight at all. You're reflecting back to your left-hand side. Nothing here at all. So all you're doing is marking up from the top to the bottom, and then you highlight this area to see if price comes back into this area, because it's not just ready just to, oh, just because it came and created a new high, it's going to just drop dramatically. It has to give you a pattern before it drops. It has to be a reason why it drops. So we're going to see, you know, a few pullbacks and comes back into this price area, right? Comes back into this price area. Comes back into this price area. So you could have had not 1 or 2 or 3 sell opportunities. Well, you did. But it all depends on not getting a sell here. We're not trying to get in a sell in the middle of where the candle of the movement. If it's not high, then you should not be selling it. Just because, you know, a market tends to come down like this and you're selling it like right here, I mean, right there, you just don't know if the price is just going to, you know, revert back up because your position wasn't high enough. So what I like to say, which I'm going to be giving you guys on the whole update on the Academy, is that I really break it down to telling you, you know, if there's no retest on a downtrend market, do not enter it. Don't even enter it. Don't even bother even entering it at all. So going back to where that you guys see is on this price structure here. So now you could use your Fibonacci retracements as potential entries. But if it gives you a retest, then that's a great entry point. So as you guys can see, even on the 78 retracement, it came down. I'm not selling it here just because it came into the zone. It wouldn't make any sense. I need a retest. Sell at resistance, buy support, generally speaking, with other confirmations, of course, yes. So you're waiting for a retest to come in. So you see one right here. So let me zoom in. So you see it come up, nice retest, perfect. That would have been a great entry here. Perfect. So you see the market come down, it gave you another retest right into the zone. Perfect. It's coming down. So it comes down into that 61 retracement. So everyone knows the 61 retracement. Oh my God, it's the most important level. Yes, it is. But if it's not giving you a retest, don't enter it. It came down. What did it do? It retested, right? That is your entry, your third entry. If it's coming down again, coming down to the 50 retracement. Showed no way of a retest here. It's just a continuation. So it keeps coming down, comes all the way down to my 38 retracement for a retest. Perfect. Comes all the way down to my 23 retracement, retest. Comes all the way back down to the 23 again, retest. So overall, we have 1, 2, 3, 4, 5, 6. 6 potential entries that you should not be losing money on this trend. It's very simple to identify where a trend is at, then execute. Now, which I'm going to even show you about having a breakout. So we could see all this movement right here is a bullish movement, right? So instead of using a typical trend line, which I don't like to use, I like to use an extended line. So we see that price came up to here, 1, 2, 3, 4, 5, complete breakout, which I'm going to show you is that if you have the market coming down on these 2 wicks, so you see it on these 2 wicks already established, and you're determined where is it going to really break out, where. So what I like to do is that I like to get a nice triangle, highlighted area, and I just mark up to where the wicks are, and I bring it all the way down to the bottom. Boom, perfect. This extended line here is gone into existence. We do not know where the breakout is going to happen, but we know that this is an uptrend market and it's going to be looking to be creating a high. So it did create a high. So the last time it was in this position, was July 9th of 2018. It was July 9th. That's the last time it came to that position. So if you go back from the past and reflect to the future, you know where it's going to be creating a high because it has to surpass it. So it did surpass that with that wick a little bit, and then it came back down and it got rejected a few times. So then you mark up your extended line. Boom, perfect. This is already marked up already. So you're seeing where price got rejected, as you guys can see, as an uptrend market. Then here, finale. And look at how clean it is right here, just by having that extended line for potential breakout. It got it right on that retest area, right? So if I got it on here on that retest area, would have used my short position tool, came into the next retracement level. So I would have used the 6-1 retracement as my take profit, 1, 50, 2, and then the 38 as my third take profit. So 50 pips, that's nice. 82, it's amazing. 115, perfect. Anytime it creates a new high, it's going to be coming all the way back down into where price initially took off completely. So your USD is still going to be coming down until it surpasses this area. And an overall picture, it's a triple bottom. So once you see that it comes into this price, what the past did is what the future is going to do. So once the price is going to come up to here, now we're going to delete all of this. So if I get here, now what I'm doing is just getting the Fibonacci tool to be going back up to that price. So it looks like this price area on the 88 retracement level Yep, that's right. So once it hits on this 88 retracement level, that's going to be giving me that indication that's going to be forming a left inverted shoulder. So once it forms that, this is where I'm expecting where the head is going to be, and it's going to come back into that price for a pullback, and then we're going to be riding it all the way up until it surpasses a new high. Do you always place Fibonacci from the support to resistance? Yeah, I do. It just makes more sense to do so because price just always tends to align where the potential pullbacks or retest areas. So then you could just have that potential. It gives you like another confirmation of where you could really enter and then execute. Can you pull up your Fibonacci settings, please? All right, Lucas, so here are my settings right here. Just let me know, give me a 1 if you have everything, so then we could proceed. Does everyone have that? Check, took a screenshot. Awesome. I don't know if this is a dumb question, but the ones behind the candles are what are they called? Wait, Nelson, what are you referring to? Oh, you're talking about moving. Oh, yeah, those are moving averages. All right, awesome. So as you guys could see on this downtrend market, how are you talking about the moving averages? How you could put them on your chart? Oh, okay, awesome. So you just click on indicators and the 3 moving averages I have. So you just type in EMA and you want to put moving average exponential. And then you click it, it should show on your left-hand side. And then you could have it on settings, on format. And then so I have it on 5. And then I have the style color, whichever that you choose to put. But I'm just going to give you like numbers of the moving average. And then you could just add all of them. So it could just be, you could add right there and then it would just show you instead of just going there manually. A second moving average that I have is 13. And I have it on blue. And then my last one is 66. And I have that as purple. So let me know if you got those numbers for the moving averages. It will create a new high after the triple bottom. Yeah, so that's what the markets tends to do, but it will probably take all week to do so. So once it comes down, so I should expect at least by like less than 2 London sessions, or even probably even New York, since it's been probably having new momentum. But it's a whole new month, so not the kind of month that we had in September. So it should come and form an inverted head and shoulders, and then that will be the overall trend as the bullish trend. So as you guys can see, this is a complete, bearish market right now. So it's kind of forming a whole pole. So what I like to do, make the whole extended. Answer this question. So, Ken, have you heard of Vegas waves? And that's what I use for my moving averages. No, I haven't heard. Actually, just message me after this call, and we'll talk more about that. So we have the whole pole here. So what we're going to be seeing is that if price comes down into here, and we probably might have a touch around, 1.5, 176, just to create the head. So we got to see that it surpasses these previous price of support in that area to create the whole head. So and then once it breaks that, we're going to be looking to see that, if it forms that triangle. So where's my tool here? So that's where I'm looking for that breakout to come on this extended line here. So we know that it was going to come through, but overall, if we see that breakout there, that's confirmation that we're good to go. It's a complete nice uptrend market, but we already know if people want to really capture it on just coming into that support, knowing that that's where it's going to be a good entry, then you could ride it. But a lot of people I'd rather you have like a really good confirmation where it's safe, where you can have an entry and then take off from there. So I'm going to unmute everyone. So now you guys could just hit me with your guys' questions. If you guys have any issues of knowing how to use the Fibonacci retracement tool, and et cetera, et cetera.
Hey, Ken, what's the difference between the fib retracement and the trend-based fib extension?
Well, the trend-based extension is just kind of just used for TPs. I don't use it for anything specifically. But it's just it kind of gives you a confirmation on where the 61 retracement is going to be at. So that could kind of give you just more confirmation to use, and you could use the rest of the following numbers for the settings profit. But I know in my previous, like for example, I like to use previous high lows as my TP. So if I got the entry on this retest area, where I'm placing my take profit is on this previous high low here. So if I see how it comes down to it, and this previous pullback that it had here, that's my next take profit, and so on and so on. So I use the past as my confirmation as 19 levels. That's how I know that it's going to come back into that previous support and where you took that.
Text saying you want, you know what? So Debbie, like you had the boy.
All right, thank you.
Can you so there's this thing that the silent Billies they were talking about. They said the Fibonacci and the retracement. Can you like show how do you use the Fib retracement with the Fibonacci? Like what do you align them with?
That's his number.
Wait, say that one more time.
That number.
Like there's this instead of the Fibonacci, there's like a Fib retracement, something like that. That uses to oh yeah, it's a trend-based Fibonacci extension. Can you show how you like put that with the Fibonacci? Like where do you align it? 'Cause I never know how to do that.
Yeah, so you just align it just like how you mark up your Fib retracement. So if you see where I have where the 100 is at, right? So all I do is just I drag it from the same position, and then I drag it all the way back down. So this is where I'm having my take profit levels. As you guys can see, it really aligns just to the complete opposite of what the original Fibonacci retracement is. So this would be my take profit 1, 2, and 3. So if I have a long position tool, first take profit, this would be a really, really long trade for 101 pips. So this is more for people that that more of a long-term traders that I like to show trend base. But if you're not and you just want to keep to your trading plan, your first take profit 1, 30 pips, second take profit 60s, and then your third take profit 90 pips. So you're just capturing that movement. So you're really not losing by doing so like this. But usually sometimes I am like I like to if I see that it came into support, then I'm seeing that it's going long. So this is the initial take but of course you never lose by securing profit. The profit is the profit. So
Gotcha. Thank you.
anyone else wants me to go over anything that just what I just showed you guys? What deposit methods do y'all use, and how long does it wire? If you're using Hewlett's Way, Zelle, you get it like less than 15 minutes into your account. You use anything Ash Canvas at all? No, Lucas, I don't. I don't tend to like to switch stuff up. Because, and it just goes everything to like my analysis on such and such. I know people do use it, but it's really up to you. Whichever that works for you. It makes you to chart better. So you sell right now and enter into the zone? No, not yet. It's right now. It's just we're kind of consolidating now. So I rather just wait and allow the market to move because I don't like to get in short movements like that. So I rather just have a better clear confidence to know what it is and what I'm getting into. I don't like to get into the trade setup when I'm blind, and then it's just like, oh, okay, and then it completely spiked up. Okay, so GU. Are there certain charts you recommend to practice on? Well, you can practice on, honestly, my best opinion, that if you really want to get practiced on, just practice on pairs that you like to trade because it only makes sense to do so. Because if you practice on the pair that, you practice on the pair that you like, 10 out of 10 chances that you're going to be really successful trading that pair. So it's just going to be like instant gravitation. Like you just be like, all right, I love the British pound versus the US dollar. I practice on it so much that, I know how it moves. And then you could able to start seeing results because you put a lot of time into it. I'm not looking at cryptocurrencies right now. It's just not my interest right now. So sticking to the week. It's just been, going up and down, up and down. The only time I'm going to be looking into it and to actually see some really like big movements. There's really no point of trading crypto right now. It's just kind of like, to me, it's a dead market right now. So I know a lot of people are just getting involved in trading it. So how do you use a tool that shows to take profits in blue and stop loss in red? So this is the short and long measurement tool. So the long measuring tool, you see as a bullish market, the short position tool as shorting it. So I'm going to show you guys here. So if I got here on this nice double bottom that it formed here, whoops, the hell did it take me to? All right, so perfect. So if I use a long position tool and I saw that it came here on this double bottom that it formed, click on the settings here. And you could change the color. I know when if you haven't used this tool, it's going to show like, target color is going to be green. Here's going to be red. So you could change it to whatever that you like. It goes according to like, if you have to see your risk, 25%, account size, has all that sections there on the style. And the coordinates, so entry point. So if I'm giving out, buy stops, buy limits, sell stops, or sell limit, you're going to plug in the entries here. You can plug it into your trading view, and then your profit levels, you just change here, and then you could adjust it, and then your stop loss as well. So that is how you use a long measuring tool, and then you could just drag it, and it will tell you on the left-hand side of where you're dragging it to the price on the right-hand side. So if I'm using a short position tool, same thing. You can drag it, see how many pips. So 205 pips, that's how you see it right there. For gold, since it's a commodity, a lot of people tend to get confused by that. So this was last week's trade setup. So it came into the entry here on gold. Is really simple. It's just always, the middle section here, as you guys can see. So it's not 1,541 pips. The last number, it's gone, so you don't focus on the last number. So if I go all the way up to here and I'm starting at normal, that's 21 pips, as you guys can see. So it's always one away from the decimal point. So as it comes down and gets bigger, so it's 103. So you move the decimal to the right, it's 103 pips, so on and so on. So it's the same thing with exotic pairs as well too. So when people are saying they call it like 2,000 pips, there's no way that you're catching 2,000 pips on one day. Depending if you really got it from a high top of the trend, then yeah. So that is how you calculate the pips on the short measuring tool. I know gold is very different. The exotic pairs are different. Cryptos are different as well. So it's the exact same thing. Just cryptos just has a higher spread. So it tends to move the market. Let's see. So left now, he's exposing them. No, I'm just saying, like, there's just, I'm not even going to be, like, saying I'm exposing, like, because I was actually counting them wrong, especially for the exotic pairs. So, but the more it made sense to me, I was like, wait, 1,000+ pips, like, so just want to give that clarification. Ken, is there other tools you use to confirm the trend, such as Pitchfork or Elliott Waves, to have the trend to confirm that patterns that is heading in the direction is going? No, not really, because I don't like to tend to use so many tools, because and then it kind of throws off on the skill set of just focusing on where you could just make things more, not less complicated. So I always revert as the past of what the market has done, and then I just wait until it comes into that certain price, and then that's where I know the direction is where it's heading to. So if you guys don't have that app, called Levels is a really good app that if you're not around like your computer all the time, it can give you like an alert. So for example, if I got into a whole trade setup, I know that it created a high up here. So I pay attention to where the last high of the market is. So I will put a horizontal line here. We're on a 1 hour candle. So each candle is an hour. So that would be 3 hours worth. And realistically, we're not going to be on the computer looking at the screen for 3 hours to see it's going to break. So you could use the app called Levels, have it on this price. It says that it broke. Comes all the way down. So this is where you could have entered, create a new high. So with the past, what it did over here, did a nice head and shoulders. So what the past has done is what the future is going to do as well. Came down. I can see where did it retest this wick, right? If you come back to the future, so you can see where it retested, but it failed to come into that price area, but you could revert back into the past and seeing what it does, and it's coming down, right? So the black, the moving average, the 5 moving average I look, is always looking to be creating highs. So I see that I create a high, but overall it's still under the 66. Perfect. Then you could just be marking up trend lines, if that helps. Perfect. So came down, retested, created a high, broke. So came up, retested, came back down, retested again, and then broke. So now you can see that overall, you're looking for the breakout with all this, retests coming back into the zone. So it's just forming a nice triangle there. So now you're just waiting for that breakout. So if you miss the entry here, that's fine. You miss the entry here, that's fine. Just wait for the overall retest area. So if you zoom out, you could actually see it. So this is a complete retest. buyers are losing exhaustion in this trend. So bearish are just going to remain in control. And that's the breakout, retest, enter here, pull back, retest, and then you would have entered there. Just because you waited for the market to move. So like I'm always looking at where the past has created lows, so then I could just mark up to the future. And then you could use the app. You see how it got it right precisely on where this retest area is? So you would have entered perfectly. So you don't really need to have so many tools or indications or indicators, but if that works for you, then all means do so. Like everyone has a different way of looking at the markets. That way, everyone has a different way of just applying tools that they want to apply. And if whatever at the end result is for you to be profitable in the market. So I love trading naked. The only indication that I use is just, my moving average and just the tools like the Fibonacci and using trend lines and extended lines and sometimes the trend base if I'm trading on for long positions. So and then if you identify the patterns, the patterns, then great, because you could easily spot it out without even marketing on your chart. So the more you keep getting more precise on it, the more you're going to be seeing it, and it's going to start clicking. So when it's on a downtrend market, you're looking for retest areas. If it's for a bullish market, you're looking for pullbacks. So pullbacks. So great example right here on gold. So it's going to form inverted head and shoulders, but it's not always going to look like the best. And that's what I really kind of struggled when I first started trading. Like I was just always like, all right, it has to form a perfect inverted head and shoulders, but it's not. The market is just going to move how it's going to move, but it's your job to identify where it's creating a low in the market. So it's coming down here. This is the left shoulder. This is the head. Comes back into this price area, right shoulder. Now we know it's complete takeoff. Where is your take profit going to be? Right here, your take profit 1. So take profit 1 is right there. Take profit 2 is right there. This is not me not even looking at the markets. So you entered here. Boom. Take profit 1 gets hit. Take profit 2 gets hit. What is it doing? It's coming back down, right? So you could have used a nice trend line. As the market is going, you just keep adjusting where your trend line's at, and perfect. So you see it where it breaks, perfect. And this is a nice pullback. Remember, this is still an uptrend market. So this is a nice pullback. Came right back into your take profit 1 area. So as your past resistance now becomes your new support and completely takes off. So then it makes another pullback, takes off. So it was short of your take profit. So this is why anytime that if you're trading and you get into a position here, you could use stop profit on your trades. So in case trades does not hit your TP, you could at least have it on that last pullback. And then if it does retrace back down, boom, you secure profits from this trade setup. So let's see how many pips that is right there. So that last pullback right there. I don't think anyone in this call will be complaining about 202 pips. I sure wouldn't. So, and that is how you're trading smart. So just remember that, the markets are not your friend. They're going to be making money or taking your money regardless. That makes sense for everyone? Yes. Call levels, market assistant, that's the app. When I'm back testing, will it always save the markups on a specific chart? Yes. So if you go on settings, everyone, let's see. So if you go right here, So it's gonna like have like the pair that you're currently on, and it's gonna have like a little cursor. So if you want to save, you could save right here and have it on auto save. So then every markup that you have, it's saved. So does that make sense with everyone? Did everyone understood what this session we're using the Fibonacci retracement, identifying where potential breakouts are, knowing where the TPs, if you're not using the Fibonacci retracement as the levels for take profits. You know, what I struggle is when I do is determine what I will be my take profit and stop loss. Can you provide an example and determine where I should? Stop loss, you should always have it at least 50 pips away from your entry. So can you put the settings for the trend base extension, please? And let me answer Ruben's question really quickly. So if I had my entry here, oops, this is my long position tool. So I have it for at least 50 pips away. That's all you need. Some people like to have it as 30 pips away for your entry. Whichever works for you, but I always have at least 50 pips. So if I see it as moving momentum, then I start to put stop profits on my trade setup. So if it goes up and this is where the current price is at, I'll put my stop take profit here at 177.769. And then if it does comes back into that direction, that I'm not losing money. At least secure some profits than rather than nothing. Yeah, so it's also a trailing stop loss. So whichever that you want to call it, stop profit, trailing stop loss. And then you'll be secure and not just like, you know, losing money. Yeah, fib, retracement settings. But these are my settings I have for the trend base. So just give me a 1 once you have it checked off. No, put that away. All right, awesome. All right, so appreciate you guys hopping on and taking the time. Just let me know if you have any questions regarding with the Fibonacci tool. I'm trying to get back to everyone as quickly as possible. I know I've been really, really busy on helping you guys on the whole academy section as well too. So tomorrow night, gonna really be structured. When we look for potential trade setups, not gonna give up too much because it is NFP week. So we'll see some good potential breakouts, and you know it's a whole brand new month. So I just want everyone's accounts to be ready for that following week. So then, you know, I'm gonna be giving out to at least like between 30 to 35 trade setups. And I'm not going to miss any sessions at all. So it's going to be New York and London. So for London, it's going to be 12 midnight Pacific time. That'll be 3 in the morning, East Coast time. And then for New York session, it's going to be from 5 in the morning Pacific time, and then it'll be 8 in the morning East Coast time. Not tonight. We'll see. I'm going to be looking at just 2 pairs. Just keep it sweet, simple. It's going to be, majority is going to be Euro USD and USD CAD. So we'll see what those pairs do, and then if we could capitalize it, then all means, then we'll go after it. Awesome. NFP works crazy. Yeah. So should be very, very, very interesting to see how it plays out, because I'm going to have this call live. If you guys have been on my NFP calls from the past, I rarely lose on my NFP trade subs I do give out. But just know when I do give out those calls, I do not repeat myself. So once the market moves, it moves. But this is also a good time to, even though this is a live market, to practice on your skill set too. So, just I want you guys to know I don't want you to have that mindset that every week that you're trying to make money, because that's not the right perspective that you want to go about with trading. You want to keep perfecting your skill set, even when the market is a dead market, and also while it's on a live market. So it shows your reaction, how you could see where the market's coming into a place of a retest or pullback, waiting, testing your patience. So don't lose at all with doing that. If you know, I give out TPs and stop loss in Telegram. What are you referring to, Ryan? You talking about NAP? If I'm going to be giving out on Zoom or Telegram, I'm going to be doing it both. So I don't give out TPs on NAP. The market just moves way too fast just to see where it goes. So if you're in profit, close, because you can make money both ways. So. Your USD CAD and CAD C-shape calls, who will you be giving the TPs and stop loss for those? Yeah, I always give out TPs and stop loss. All right, so if I don't have any more questions, and I'm going to end this session, just be aware for Telegram. I'll probably might be giving out trade setups. If I do, most likely New York session. Will this be an academy, correct? Is this your first time? This must be your first time. So you should be in the signals chat in the Telegram. And then, you're talking about the recording. Yeah, the recording is going to be in a vault in the academy, so you have access to them. So once this is done, you can rewatch this. I just missed the 20, so I want to get the first few. Oh, the first 20 minutes. All right, awesome. Yeah, so all the calls are recorded, so then you're able to watch this. You plan as much as possible as you can, and then get to it. I appreciate you, Michael. All right, so you guys have an awesome and amazing evening, and it should be a good week, good NFP, and then let's get after it this week.
Yes, sir.
All right, take care, everyone.
Peace.
See you later, Ken.